Welcome back to Shivkumar classes. Now, the most important topic which I am covering is company balance sheet. Under this company balance sheet, as per 2013 Act, Companies Act of 2013, Schedule 3 of 2013 Companies Act. The balance sheet which I am covering, this is the common topic for second year PUC, second year Bcom Corporate Accounting, 5th semester IFRS, and the BBA, and even other CA, CMA, CS, and all other higher courses. Now, let me give a simple format in this. Even in this lengthy format is there, which I am giving based on the syllabus oriented. A balance sheet is subdivided, it is into two. One it is the liabilities and another one is the asset. Now let us see the liabilities. Now the format which we are doing now, it is vertical format because the entries are written in one below the other. Now the very first one is the equity and liabilities. This itself indicates the two different portions. The first portion is equity and the second portion is liabilities. Equity is relating to owner's claim. Liability is relating to the outsider's claim. Yes, the owner claim is called as the shareholders fund. Under this shareholders fund, the very first one is the share capital, and the second one is the reserves and surplus. Even some other entries are there which I am avoiding because in problems it's not at all they are giving, so therefore it is very rare cases it is, so that I am giving with this only recurring entries or which is asking frequently. Next one is the non-current liabilities. So under this non-current, yes, non-current means that long term, and current liabilities means short term. The liabilities are subdivided into long term and short term. Under that non-current liabilities, long term borrowings will appear. Okay, under this current liabilities, what will appear? Short term borrowings. Next, after this short term borrowings, what is next? The second one, it is the trade payables. After this trade payables, next one is the other current liabilities. And point D is the short term provisions. Yes, now I have covered with the liabilities. Now expansion of this liabilities, let me provide it. The very first one, it is share capital. This share capital is combination of equity share and preference share. Next one is reserves and surplus. Let me subdivide it is into reserve and surplus separately. Reserve refers to general reserve or reserve fund, and surplus refers to profit and loss account, securities premium. And these reserves and surplus joined together will include some other entries: dividend equalization fund, sinking fund, etc. Yes, after that, long-term borrowings. This long-term borrowings includes debentures, debentures, and any bank loan for long period of time. It includes the mortgage loan also. Now, after this long-term borrowings, next one is the under current liabilities, short-term borrowings. Any borrowings which has to be paid less than 12 months is called as the current liabilities. Anything which we pay more than 12 months, we call it as the long-term borrowings. Yes. Next one is short-term borrowings is over. After the short-term borrowings, next one is the trade payables. This trade payables includes creditors plus bills payables. Next, after this trade payables, other current liabilities. Other current liabilities. So 1 minute. In short-term borrowings, we will get to the bank overdraft and any borrowings which is less than 12 months. Other current liabilities are outstanding expenses, unclaimed dividend, etc. And at last one is the short-term provisions. What is the short-term provisions? That is provision for tax, and proposed dividend. Provision for tax and proposed dividend. Yes, these are the common entries will appear into the liability side. Even plenty of entries are there. As per our syllabus, we are covering it is with the less items. Next, coming to assets. The assets are, it is classified, it is into non-current asset and the current assets. Current asset, let me show it is into the another page. Non-current means that long-term assets. Under that, the very first one, it is fixed assets. These fixed assets are classified, it is into, first one is the tangible assets and another one is the intangible assets. After this tangible assets and intangible assets, the next one is the non-current investment. That is the investment for long period of the time, and another one is the other non-current assets. Yes, these are the assets. Now under this, let us discuss what is this tangible assets. Tangible assets are those assets which can be seen and which can be touched. Example, plant and machinery, land and building, furniture, vehicle, etc. Next, coming to intangible assets. Intangible assets. What are these intangible assets? Goodwill, patents, copyrights, trademarks, license, franchise, software. All these are, it is the intangible assets. Next one is the non-current investment. Non-current investment means that the investment for more than 12 months. Non-current investment is for more than 12 months. And other non-current assets, various other assets for the long period will be provided. Next, coming to, as per our format, after non-current assets, the next one we have the current assets. So next one is current asset. Current asset means that its life is for the very short period of the time. Therefore, the very first one is the short-term investment. Short-term investments. What is the short-term investments? The investment which will be held within for the less than 12 months. Next one is the inventories. What is this inventories? Inventories means stock. So inventories includes inventories. That is stock. After the stock, loose tools. Stock, loose tools. Stores and spares. Stores and spares. All this we call it as the inventories. After this inventories, in current asset we have trade receivables. Trade receivables. What is this trade receivables? The trade receivables is equals debtors plus bills receivable. Debtors plus bills receivable. After this trade receivables, we have cash and cash equivalents. Cash and cash equivalents. What is this cash and cash equivalents? The cash and cash equivalents includes cash in hand and cash at bank and other checks and DDs, demand drafts. Yes, after this cash and cash equivalents, the next one we have the short term loans and advances. Any loans and advances which is provided to the workers, we call it as the short term loans and advances. And at last one, it is the other current assets. Other current assets. In other current assets, we will record the prepaid expenses. So these are the maximum entries will appear into the balance sheet in regularly. So with these ideas, we'll try to do some of the problems in other videos. Thank you very much for watching this video.